Hey, how's everybody doing? This is United with Nexus Investments. Today's video, I'm going to go over a trade recap on three different stocks that I got into. And the first one that we're about to go over is Amazon. So here I wrote out that I bought the 8 January 31.90 contracts. When you buy weekly expirations, you have to consider the Greeks. In this particular contract, I had a delta of $62 and a theta of $484. So you can see that the risk and buying weekly contracts is exponential. So you have to be fast and quick in your contracts, hop in and out. So as a scalper, you already have the mindset to do so. But as a swing trader and you're willing to buy weekly contracts, you have to be careful on what you buy, and you have to change that mindset back to a scalper so that you can get in and out of this trade and some exponential gains. So how I was watching Amazon's been pretty beat down over the last couple of days. As you can see, there's a downtrend happening over the last 3 days. Every day I was waiting on Amazon to go through a trend change to the upside. And I was kind of relying on the community to let me know when this trend has changed. So, and I also have some other factors of entry and why I took this trade here. And so when I was whenever I'm considering a trade, I always look at aftermarket and pre-market values, and I always do my markups. I always draw my levels. As you can see here with this white line, I drew a resistance level here, here, and right here, pre-market. There's also rejection here in this area. So I knew that was a good level where the institutions were selling off. So in the event that that resistance is broken, which was here, I knew that this level was taken out and they'll be looking for new levels. Also, some other things I considered before taking this trade. We had a low here at this point in which the price moved up into close. So I felt like that was a bullish move back up. I almost felt like I should have got in and I would have missed it, but I did it. Going into pre-market, I saw the price fell down here and then it started to go back up as the market started to open. And some other factors I considered to help me get into this trade up morning is that I came in the mindset that I wanted to trade the open volatility. So immediately upon opening, I normally wait 30 minutes to an hour before I even get into a trade. But if I have in the mindset I'm going to trade open volatility, you got to be in the mindset that you're going to get out quick as well. So quick scalp. That's what we're into. So I utilize our resources within the Nexus community. We programmed the trend change bot here. And as you can see, at about 9:34 Eastern time, the Amazon call trending on the hourly time frame painted, and I immediately went to the look at the chart. So upon looking at the chart, I noticed that this candle was breaking out and retracing close, and then another candle opened up above the previous candle and started spiking. I immediately saw that it broke this resistance, which was drawn. And at that point, I decided I was going to enter. So I entered on the breakout. The pre-market highs was the last confirmation of entry that I was going to take this trade. I bought two contracts. The first contracts I bought was at 46.65. And then I got another good deal for my second contract at 44.11. So that was my quick average down as this candle was moving up within the 10 minutes. Now, if you have an entry plan, you got to have an exit plan. So I already had planned to get out here at the 100 EMA, which I know that is a higher percentage of a resistance here, but it actually broke through that fairly quick, went up to this point here on the top wick, ultimately retraced back down to close, And at that point, I was up a lot and then it retraced. I was going to wait for the next candle to see, but I was prepared to sell. The next candle opened up green. It immediately went up, skyrocketed to the top, and then it started retracing back down. And as it was retracing back down, I already set a mental stop loss on my profit that I was willing to take. So on this trade, my profit was peaked out about 2,500, and I was only willing to give about $200 back to the market before I decided I was going to sell. I know normally they put stop losses on, certain levels, but you have to think about trailing stop loss. So I trailed the stop loss not by stock price, I trailed the stop loss by my profits. And that's how you know that if you're up $1,000, you tell yourself, I'm only willing to give back, I'm only willing to risk $200 in order to see if I can get higher gains. If you get higher gains, then you move your mental stop loss up higher. If you at $1,000 currently and it drops down to $800, you go ahead and you just lock in profit and sell because you were willing to get $200. If your profit moves up to 1,200, now you move your trailing mental stop loss up to 1,000, and then you move it up slowly but surely that way. If the price retraces, as you can see with these top wicks, those are retracements. This top wick here, retracement. Top wick here, it peaks and retraces. And that's what's going to happen. That's natural in the market. So you just have to be advanced in your exit plan to know that you're going to not give back everything, but you're willing to give back a little bit for higher gains. So I wasn't in this trade long at all. I was in this trade about 20 minutes. And once it peaked at a certain price in my mind, I was going to give back a few $100s to see if I go all the way up to the 200 EMA. So that was my target. Once it crossed here, the 100 EMA, I seen it blasted right through. I was willing and ready to sell. It opened up above. So my next target in my mind was the 200 EMA. It didn't quite get there. It pushed up here. It pulled back a little bit, and I went ahead and sold. Okay. And that was it. The trade is closed. And it's just something I want to point out. When you're trading weekly options, you have to consider the Greeks, as I stated here above. Although this price retraced back down, I would have gave back all my gains and I would have been in the negative. You can see that this popped, it retraced all the way back to support, the 21 EMA, popped back all the way to the 100 EMA, which it retraced again. It came back, reclaimed, and it actually went higher than where I sold here, which it hit the retracement of 200 EMA, which I wanted to expect that here. Although this price went up here, I wrote here and noted that this contract was still only worth $54.50, which is a lot lower than the price I actually sold at. So just because the price is higher doesn't mean you're going to be making more money. The further out your contracts get, the less data decay you have to worry about. Okay. So that's something to consider. Why it's imperative that if you're trading weekly contracts, you get out quick. Okay. Don't sit here and mess around and give all your money back. So let me show you the profit on that. 2.2K on this one. Moving on to FSLR. So I've already was planning on getting in this trade. Pre-market, I go through and scour my resources within the community. We have a chart analyst channel. I go through that. I also run nightly scan on a research bot, and I also scour social media for some content. And I came across First Solar, which had an analyst downgrade to $90. So with the analyst downgrade to $90, there was a gap down here. You see it got all the way down here. And then I started watching it pre-market. I'm not watching this the whole time. It's just that I know that this is on my watch list. So I come back before the market opens and I see where this stands. Well, I mark my levels of support here. And with the downgrade, I'm already going to assume it's going to continue, keep going down. So I already had in my mind that I was going to enter on the break of this support here. So upon the drop below the support, I thought this was the time for it to keep dropping. So I entered the trade at about $7.10 per contract. And I held on to it for a little while. I was pretty confident due to the catalyst of the analyst downgrade that this was going to be okay and it won't keep going back up. Plus, I know that there's a lot of resistances above the current price, which you have the 55, the 100, the 200, and the 400 EMA to knock the price back down. So sometime later, the price fell below here and actually cracked where I thought it was going to go. And it came back down and it hit a support and I sold. Okay. So I went from 7.1 to 8.85. And I think you've seen it earlier, but I went ahead and posted this trade in the group. Said, hey, I was going to take a short on this one. So I bought some 19 February 95 puts. Reason why I went further out on this February is because I was willing to swing trade this. Had I intentionally wanted to scalp this, then I would have bought a weekly or I would have bought a next Friday. And I generally buy next Fridays for a little bit of safety, a little bit of less theta decay, a little less gamma risk. If you don't know anything about gamma, theta, delta, vega, you might want to get into the grease and watch the videos. I was willing to swing this, but of course, it went ahead and had some volume and price action kick in, and I went ahead and sold. If I wanted to get back in here, I just want to point out for education purposes that I would have drew another line here on this consolidation area. And as it broke down here below, I would have entered in for another put all the way back down to anywhere in these levels I would have sold. I would have been making money again. But usually once I get in and out of a trade, I walk away, I take the win, I try not to revisit. Moving on to Tesla. So I wasn't really watching the market all day. From the looks of it, the market rallied here. Then I was going through my Discord. People were talking about Tesla, seeing some flow. I started, getting an interest in Tesla to see what it was all about. I know it's very volatile. Then I heard about the Capitol being raided over there in DC. So there's a callous event dropping the market. So I went ahead and visited Tesla to see what it's all about. I went ahead and marked the trend line here from yesterday's closing prices up until support here. So I drew this trend line real fast. And all these trend lines and thoughts in my head on why I should take this trade, over the years of studying, it naturally comes to you quick. You naturally see these double tops here. I naturally seen this top. I naturally seen this top. And I see it coming back down, but I also know that there's this support area here. So you want to mark up your support here. You want to mark up the support here. And it's something that you just realize mentally what's going to happen. You're like, okay, I got 3 touches here and back up again. So I marked this support line and I told myself if this breaks, I'm going to drop it. So I entered in. As soon as this engulfing red candle came down, you see the 10 crossed the 21. Once the price started breaking the support area, I knew that the bears took out the support and it was going to move the price down. I'm telling you that the catalyst today was devastating, and I knew that they were just going to take this price. So I took advantage of it. Still, I was a little bit safer about the next Friday expiration, the 15th January 770 put, which I always buy. You can see here the 770 put was above the current price when I entered. I always buy in the money or I buy one strike out of the money. So the deeper in the money you go, the higher your delta is. And that's great for scalpers because we want higher delta so that we can make a profit quicker on our trade. So exit plan. If you got an entry plan, you always need an exit plan. Okay. Um, but so after the but I'll get to that a little bit later. After the confirmation of downtrend here, it dropped here. I missed this entry. I didn't get a fill here. So it dropped. I was like, oh man, I missed it. Anyways, it bounced back up. And that's, you go through an emotional roller coaster, in these moments. Don't think that all these traders is peaches and cream and they just know this last all the way from this top here, all the way to the bottom. You never want to try the plan the top. You never want to try to plan the bottom. You just want to be able to get in and out in the middle, catch a nice bullish or bearish candle, especially as a scalper, it's easy to do. Within Tesla, these little 5-minute candles can range from $5 to $10 to $15 within 5 minutes, and you're out in 5 minutes. So I definitely consider time factor within these candles when I get in. Anyway, so I pop back up. I seen that it rejected off this 55 EMA, closed here below, and then another red candle came. It actually didn't pump at all. Volume down here was building up on the bearish side. I knew with the news going on, it's just going to keep dropping. Also consider other mental factors in my head that naturally come to me as I'm studying through the years, that we got like an ABC correction here. So I seen that it came down, it popped up, and I immediately knew that we were going down for a C wave correction. So I consider that. And like we did with FSLR, I marked another level that I was willing to, that needed to break down to confirm entry. So once it's popped up, it rejected. I came down. Once it started breaking out the support, then I entered here at $27.25 per contract. And I exited here. Oh, so the exit plan for this was the support trend line. So I love trading on the trend lines and the breaks of the trend lines. I had to respect this trend line here. I respect this trend line here that was established. So my exit plan was to get out here at this trend line, and I would actually watch it at this moment. If not, this is the support area I was looking for, was the 200 EMA. I was looking for the bounce here at this point, but this candle closed the trend line, so I was really watching this. It opened up here around the same previous close candle. Then it was green at first. You see it's red now. It closed red, but it was green at first. It started spiking up. As soon as I seen the spike, I was out the trade. Okay. This contract peaked about $880, but as it kept going up, I went ahead and sold and I took my profit. And then I was pretty happy about it. Yeah, it came back all the way down here. And it came back up and closed. And we had another red bearish engulfing candle. So yeah, I missed out on about $1,000, $1,500 more dollars. But hey, I had an entry plan, had an exit plan, and you have to minimize your risk. You have to have goals, and you have to execute, and you stick to it. So you plan to trade and trade to plan. So showing you here what I locked in for Tesla at $690, and that's just the life of a scalper. And as you grow and develop to a badass trader, these chart patterns and these level breaks and these trade plans and these support trend breaks and contract buying will all come natural to you. So just keep studying, get into the Nexus trading community, and get in there and talk with us and trade with us, and let's all bank together. So this is my trade recap for the last 2 days. Thank you for checking me out, and I hope you learned something. And Nexus, we trust.